Welcome back to episode number 5, Market Structure Shifts. I know I took a week off. I was sick, had the flu. Not a good experience. Recommend getting vaccinated, actually. Can't really talk about that too much. Take that word out. But my content's very raw, unedited. You guys see that, obviously. So a lot of me talking, a lot of me showing you guys a lot of value just straight up. But one of the biggest things I'm going to teach you is transparency in trading, because you have to be real with yourself. You have to literally tell yourself if you're messing up. If you don't and you're blind to it, or you're just delusional, you're telling yourself you're profitable, you're never going to get anywhere. You need someone to be yelling at you, and I hopefully can be that person to consistently yell at you. I don't like yelling at people, but I tell people what they need to hear, not what they want to hear. So today's episode, market structure shift, one of the most important things in trading. So let's just get right into it. I'm going to talk a bit about it, then show a few examples, but this is mainly, it's going to be a shorter episode because it's very straight to the point. But market structure shift, what is it? People classify it as MSS, market structure shift, one of the probably most used terms you hear in trading. So in my opinion, without a market structure shift on a higher time frame, you want to keep following trend. So actually here, I'll just hop on screen immediately and show you guys this. So look at this. This is a trade I'm actually currently in, and I called out for free in my Discord. So right here is a daily market structure shift. I'm going to tell you guys why. I'm going to tell you guys what this signifies. But let me show you another thing. You guys see this massive move down, right? So we look very bearish. But what do we have on a daily time frame? We have a market structure shift right here. So actually, I'll draw this out, and then I'll explain that, and I'll explain everything else. So let's say, actually, no. Okay, we have a downtrend. Boom. Okay, we put in a sweep right there. Okay, so what is this leg down? This is our market maker sell model, right? Because we're on the sell side of the curve. So what do we have? Lower low. Actually, I'm gonna circle it. Lower low, higher low, lower low, higher low, lower low, higher high. Okay. Let me delete these. Okay, so what does that signify? That signifies that we just are, yes, this could be a fake out or a retracement. So we're waiting, right? What is this signifying? You see this right here? This is a break on a higher time frame. Let's just say this is the daily. This is a break in a higher time frame, in this case high, swing high right here. So yeah, there. What do we have? Let's just signify this as a sweep. And we have a break of a high right here. We don't want a sweep of that high, obviously continue lower. But you need higher time frame narrative with everything. So market structure shift is when price in a bullish trend breaks a high, not confirming, but signifying or confirming that price is going to seek higher highs at this point, and kind of reversing a trend, you could say. Because if we are very bearish until I see a market structure shift, I'm going to keep being bearish to keep going lower, higher highs and higher lows. But until we get that market structure shift, kind of reversing the trend, you could also use CISDs as an entry, which is another trend reversal tool I use. But until we get that market structure shift confirming a trend reversal, I'm going to keep continuing to be bearish. And in this case right here, we get our, excuse my terrible, I'm actually going to type this out. Let's just put that right there. Until we get a proper break of a swing high, in this case, this is our swing high, I would keep being bearish, but we broke it there. Let's just say, boom, you want to take a simple trade, you have a gap right there, long there, stop, let's just say below that, and you're just targeting opposing liquidity. I don't know what the RR would be. Obviously, this is just a little drawing, but let me also show you a example on the other side. How do I do that? Okay. So up, in this case, boom, boom, boom. Okay, so what is this? This is the buy side of the curve, meaning this is our market maker buy model, right? Let's say that's a sweep of a high right here, and boom, right there. Actually, I'm going to delete that one I was discussing. right there. You are having a clean close below a swing low right here. Let's just say it's on the daily, it's a higher time frame. And after that, what do you get? You get a retracement up. Let's just say it's into a nice discount within this swing leg. And price continues bearish to our lows, confirming that this right here was our trend reversal. So I'm going to show you guys this. Actually, let's clear this all up. But like I said, this can be a much shorter episode because pretty straight to the point. I'm pretty simple with explaining everything in simple English. But in this case, what do we have? Ready? This is a trade I took. I'm currently in this. So what do we have? A higher high, lower or higher low, higher highs, boom, higher low, higher high, higher low, higher high, higher low, higher high. What does this look like? Actually, here, wait. How do I change this to line? There we go. So look, up, 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 down. See that right there? Let's go back. Nope, not indicators. Go back to candles. Okay, so clear this off. Where did our trend break? Right here, right? Our trend officially broke right here. I'm going to go back to... If you guys want to learn market structure shift, simplest thing to do, turn on your... Go from candles to line. Because you can literally take a tool, draw it out. What do we have? Bullish, bullish, higher highs, higher lows, bullish, break. Oh, where's the break? You obviously need to pair everything. You need to pair internal range liquidity, external range liquidity, imbalances, highs and lows. You need to pair everything with knowing where price is going. But this is just giving you one confluence, right? So this is our current swing low before this forms, obviously. And that breaks. That closes below entirely. So that is signifying our market structure shift. So in this case right here, let me show you this. Price taps into a monthly inverse fair value gap. I'm just going to give you guys the whole entire rundown on this trade. Why not? So price taps into a monthly inverse fair value gap, right? So this is signifying monthly internal to monthly external. And if you look at this, we are on the monthly, we're pretty bearish, I'd say. We had a deep retracement, yeah, but we also formed an SMT at the lows right here, right? So if you go to EU, you'll see that low right there. I'll just draw this out for you for the sake of this video. That low was taken on EU, right? Was this low taken? No, this low was not taken. So that's an SMT right there, right? So that's signifying we have strength in one pair, weakness in another pair, and we'll continue higher to our draw. Another thing on EU is this is our monthly external range liquidity, also tapped into a monthly fair value gap. So I'm like, okay, we have a monthly fair value gap and monthly inverse fair value gap up here. That could be our next draw. Also pairing it with the Dixie, we have monthly ERL taken, monthly IRL is our next target, right? So we also pairing it with, well, there's a lot I paired this with. This is a very high confluence trade in my opinion. But also Fed's cutting rates means a bearish Dixie, which means a bullish GBP. So enough of the app. Let's get back into what I was showing you. Now we go on the daily because, like I've said in all my videos, remember the one before this or the one before that, correlating time frames. Monthly pairs with your daily, weekly pairs with your 4-hour, daily pairs with the hourly, and so on. Go watch that video. But what do we have? So we go on the daily. What does my strategy consist of, and what is extra that I will allow? It's the same thing in every trade you guys see, basically. So what do we have? Let's circle this. Within our daily that we have a high time frame monthly SMT at, we have a sweep of a low. Okay, so literally check off that. What else do we have? Daily CISD. What is that? That's my entry. That's what I use. The CISD is a change in state delivery. Like I said, extra confluences. What do I have? This is not required. Daily market structure shift. That's the point of this video. This right here, along with the daily CISD, is confirming that we will see higher price action off of an imbalance. So, yes, you could have gotten an entry. Yes, you could have gotten an entry off this fair value gap right here. But my entry comes from CISDs. So I entered off the top of the CISD right here. Got filled. We've been a little choppy. Price action has been a little weird recently. But like I said, strategy, CISD, sweep CISD, market structure shift right there. Like I said, I don't require that. But the point of this video is teaching you guys market structure shifts. So I'm going to include this as an example. Next rule I have, obviously, final rule, is low resistance liquidity. So I do think we will continue higher and make higher highs, higher lows, higher highs off of this confirmation of a daily market structure shift to continue higher. Because look at this. If you go to the line, this is actually beautiful. Look at this. What do we have? I'll draw this out for you guys. What do we have? Lower high, lower low, lower high, lower low, lower high, lower low, boom. Smart money reversal. Higher high, higher low, and now we should trend higher, higher high, higher low, higher high, higher low, higher high, right? But the point of this is, like I said, market structure shift. So let me show you. Why is that a market structure shift? We closed above this is the daily time frame. This is a very high time frame. We closed above a swing high, confirming that we could see higher prices. Obviously, it's different if we sweep out that high, but we closed above cleanly. We left behind an imbalance, a CISD right there, as well as a daily fair value gap. Let's go back to candles, and this should play out nicely. So I can also find another example. I'm going to go on the line chart, actually, to show you guys. All right, first, let's go candles. CSD there, beautiful. Oh, I'm going to show you guys like a beautiful, beautiful example. Close there. Yeah. Okay, let's check out NZD. Oh, beautiful. NZD also had it. Obviously, this is a little different. Okay, I'm not going to use that. Actually, yeah, for the sake of this, I will. Because at the same time, we got to also follow AU. Okay, so NZD USD is also paired with AU. Obviously, I'm not taking entry just off that. I didn't have enough confirmation. Yes, we have SMT, sweep the lows. But it seemed like this was the weaker pair. But let's see. That wasn't a strong enough push above there. That was more so a sweep for me. And line. You see this? If this daily held up and broke higher highs and higher lows, this would confirm we're going higher. Why do you think I have this drawn out right here? So what does this look like to you? That's a sweep, right? Why do you think we're going lower? Did we invert the daily? Aha. We did invert the daily. Okay, so AUD, USD, and NZD USD should continue a little bearish, even higher or even lower, because we did not confirm going higher off of this, breaking higher highs and higher lows, and this was not a good enough reversal for me. Yes, this could be a daily market structure shift. It didn't give enough displacement, in my opinion. If you look at GBP, it looks a lot stronger compared to that. Pair it with the Dixie, but the point of this video, like I said, I deleted everything, but I'll do this one more time. If we are in a downtrend right here, let's just say we have our high up there. Mark that as liquidity up there. Have our sweep down here. This is a very simple entry model. Why? Because market structure shift, sweep, draw on liquidity, fair value gap. Very simple. But what is the point of what I'm saying? This is a market structure shift because price sweeps out liquidity. Let's just say we tap into a high time frame imbalance there too, like a monthly fair value gap. This is the daily. This is a clean market structure shift because this swing high gets broken with a lot of displacement, a lot of volume, closes above there beautifully, and you get a retracement within a discount. Just to show you guys an example, I'll even use my fib tool here. I drew that perfectly somehow. So get a retracement into a discounted fair value gap right there. Sweep of a low, shift above this high right there, confirming that we will not, obviously nothing in trading is 100%, but more so confirming that we will see higher prices because what do we have? Market maker sell model, smart money reversal down here, and the shift telling us this could indicate a trend reversal. It's the same thing with a bearish trend if you flip the screen upside down. But if you're to look for an entry within this daily, let's just say you have an hourly setup, you have sweep CISD, boom, you have highs to target here, you have highs to target right here, and what is that? You could even call that trendline liquidity, low resistance. So I'm gonna leave you guys here. It's a 15-minute video so far, but very, very simple to learn from. Remember, market structure shifts can indicate a trend reversal. Break of structure is a continuation of a trend. That's kind of how you differentiate the two. but definitely a good confluence to use, as you can, like I said, you can catch the start of a reversal. I don't want you to catch the start of a reversal in every single trade possible. This one was just beautiful enough for me to take. But usually, if you want, you don't have to catch every start in a daily reversal. So in this case, I'm just giving you guys a little extra sauce to help you out here. Let's just say you form a daily for like wait for that retracement and then go higher off of that, confirming that higher high, higher low, higher high. The trend is now bullish, at least to this high right here. Until then, you can take a trade within this reversal here, and if your confluence are high enough, take it to the high. But I'm gonna leave you guys here. I will see you guys in the next episode.